All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about Alibaba, man. It's been in the news. It's like this is that Warren Buffett phrase like brought to life, right? You know, the be fearful when others are greedy and be greedy when others are fearful. Is this a great time to be greedy? I don't know. And we're going to have some options plays at the end too for Dylan because he's not in Baba yet. Well, a little bit.
A little bit. And the option plays are genius. He explained to me before we started filming. Stay tuned. If you like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out. Go ahead and give us a like and subscribe.
All right, we'll get to it.
Two stupid guys trade stocks.
All right, there he is, Mr. Warren Buffett, the origin of that lovely quote. I've quoted it to Dylan probably 100 times. You know, be fearful when others are greedy, and greedy when others are fearful. What in the hell does that mean when you're starting to invest, right? That's the question we're trying to answer. All right?
You've said that to me at least 100 times in school alone.
Yeah, I would say so.
That was during my movie fast thing.
It is literally something I think about, all the time. These are the kind of headlines we're seeing about Alibaba. It's like, oh, it's completely uncertain. It's like, the Chinese regulators are all over Alibaba here. And then, even have people that are just saying like out and out sell. I watched a YouTube video last night of someone that says like, I sold out Alibaba. Like they were like, I'm done with this investment. All right.
I too watched a couple of guys on YouTube that were just they're cutting, they're dipping, they're outie.
Yeah, I love it. This is the complete opposite of one of those like hypermania things where you see everyone buying into something. When I see people selling, I'm like, ooh, is there something good here? Are they missing something?
Especially selling a company of this magnitude. It's not selling AMC, right? This is Baba.
Yeah, exactly. Cool. Exact opposite situation. But even amongst analysts, you see this is pretty well split. I just took the screenshot from my Schwab app, in terms of the stock analysis here. There are some that are just like, no, like we don't want anything Chinese tech related. Other companies are going like, dude, the numbers are fantastic. Like, yeah, exactly. So, we'll see. But this is what's got people kind of shook. It's down 15% in the last week. 15% in a week.
Yeah, it's a hefty drop. And not only that, we'll show when you show the graph, it's like gapping down. It's terrifying.
Yeah, and this isn't like some little rinky-dink company. Even after all this, you're still talking about a $430 billion market cap.
Yeah, that's ridiculous.
Yeah, exactly. Same thing. Past month, down 25%. 6 months, 37.8%. It's very funny. Like Buffett will talk a little bit about this. Like, if I walked into Home Depot and saw something I wanted and it was 37% off, I'd be like, hell yeah, this is like my lucky day. But when it comes to stocks, people are like, oh no, like too risky for me, man. It's down 37%.
That is a really odd way of thinking. Because if I saw like I need a new lawnmower, I'm like 37% up. I'm in. Let's do it.
Like, yeah.
And stocks, you're like, well, I don't know.
Yeah, it's like, ooh, is there something I'm missing here? Like, you got to remember, like, the kind of investing approach that I take is try to be a value-oriented guy. So I try to look at the business, and do my best to analyze the business. Yes, there's some geopolitical concerns with Alibaba, and I completely understand that. But the business of Alibaba, and this is a beautiful, like, nice parabolic arc here of the revenue, just growing consistently. You have China, which is rapidly advancing on the U.S., closing the gap in terms of becoming the world dominant economy. Like, that's a great tailwind to have. And they have complete and utter market dominance within their segment. It's absolutely insane.
And their segment, we should link your Baba video, is the most it's like 90 segments. They do. It's much more. People just say it's the Amazon of China. It's kind of a lot more than that.
I mean, Amazon has a lot more nuance to it than people appreciate. Certainly, the e-commerce segment is, where they see that, and also the cloud, that they're both active players in cloud. Yeah. But they also will have multiple investments beneath them. Particularly when you look at Alibaba, they have the Ant Financial Group, which is like as if Amazon owned PayPal. Think about it that way.
Insane.
Yeah. So I wanted to look at Baba's price to free cash flow. Basically, that is. If you think of it this way, this is the free cash flow is how much money the business generates per share after it's like paid all its expenses, right? Like that's how much is left over. And you think about it this way. So if I were to make an investment, say at $10 of price to free cash flow, so I give $10 and this thing is earning $1 per year, say, it's going to take 10 years for it to pay me back my initial investment. right? That's how I think about price to free cash flow. It's a little simplistic, but that's a basic idea. So Alibaba right now is trading at a price to free cash flow of 13, all right? 13 times what it's actually generating.
Oh my goodness.
Yeah. So assuming no growth, which is not Alibaba,
No.
this company would take you 13 years to earn back, their initial investment at this point in time. All right.
Okay.
And I want to compare that to Amazon and see what they're selling for in terms of price to free cash flow. All right.
Yes. All right. This will be an interesting number.
Yeah. This is Amazon's price to free cash flow. 133.
Yeah. Okay.
Yeah. Granted, Amazon doesn't have quite the same level of geopolitical risk because you don't have two world powers kind of fighting over them. But they certainly have some, kind of economic impact from regulation. You're seeing, the U.S. has certainly fined companies for anti-competitive behavior before, which is something the Chinese are just starting to do. That's what a lot of this kind of storyline is about, is the fact that Chinese are simply putting in place many of the basic protections that a U.S. consumer would enjoy from U.S. companies, right? I mean,
yeah, it's been fairly misinterpreted because like that fine of the 2.8 billion at the time, everyone's like, well, it's Chinese government cracking down. It's like, no, dude, it's an anti-monopoly thing. Like we would have done the same thing. They were literally making it so if you bought something on their site, you couldn't go to other sites. Like that's not okay.
Yeah. If Amazon were to ban people for selling on eBay, of course the U.S. Fair Trade Commission would be involved in something like that.
Yeah, it wasn't like a Chinese communist thing. That was a fair fine.
Yeah, and even this week, the kind of headline was about this, consumer data privacy law. And although being China, we don't have the exact text of that law because they choose not to disclose it. The same basic premise applies. Would we not, as American consumers, expect some limitation on the way companies can use our data?
Yeah, there's been multiple Supreme Court hearings about that with Facebook.
Yeah. I know.
Yeah.
It's to me, what you're really seeing in terms of Chinese regulation is simply China realizing that they are moving more and more towards this government-controlled, moderately capitalistic society, and that they're going to need more regulations on these private entities in order to kind of protect their citizens and still, maintain control over them as a Chinese political party obviously wouldn't be interested in doing. But
I'm really glad you just said the word. I was too afraid to say it. Capitalism.
Yeah,
but it's a capitalistic approach. It really is.
Yeah, it is. But so this is where the math gets absolutely insane, right? Yes, I know I never expect Baba to trade at the same price of free cash flow that Amazon does. Amazon, I would argue, is overvalued at the current price of free cash flow ratio anyways. But if you were to actually multiply it out and look at the math and see what Baba's share price would be if they sold for the same price of free cash flow ratio as Amazon, you'd be looking at a share price of $1,600.
Oh my God. That's disgusting. And okay, even if you take out that it's like a Chinese company, like, all right, so there's always a little bit of risk. Cut it in half.
Yeah,
it's still more than 400% where it is right now.
Yep. Yeah, absolutely insane. I know. So I revisited the discounted cash flow for them. So they earned $8.32 a share in profit in the last 12 months. I gave them a growth rate of 30% per year for the next 5 years, which is roughly in line with what they've actually been doing. Their 3-year average is 30% per year. They've been a little inconsistent. Last year was actually like 49%.
Right. Yeah.
But 30% for 5 years. And then I had them level off at 3% per year, which is less than the Chinese economy is growing. So, okay. So that's pretty conservative. I think 5% could have been pretty reasonable. And then I used 11% or so S&P 500, expected rate of return, right? So you're getting a fair value of Alibaba shares today, assuming those numbers, of $304 per share. All right.
That's what it's worth today, not in the future.
Yeah, that's what it's worth today. That's discounted back at this 11% per year. That is what you can pay for Alibaba if it were to grow 30% per year for 5 years and then throw 3% per year thereafter, and still get an 11%, which is a market rate of return. All right.
That's disgusting.
Yeah. So, if you ever heard of like margin of safety pricing, I've done other videos about it. Basically, what you do is you take this number 304 and then you put a factor in it at 30, 50%, depending on how much you want to like, say, oh, my math could be off. But right now, BABA is trading at a 48% margin of safety, meaning it's about half of where it should be. Yeah.
Oh, yeah. I mean, this is like, I don't know if there's deals that happen this often to this magnitude.
Mm-hmm.
I get the Chinese, I get it, but I mean, we even did a video where I was like really hesitant after looking at all the laws, but I mean, come on, like at a certain point.
Exactly. When you're talking about 50% margin of safety, that is old school Benjamin Graham, the security analysis kind of level of margin of safety. It's not something you encounter almost at all anymore. Buffett's bought stocks now with like a 30% margin of safety just because it's harder to get these resounding deals anymore now that there's a lot better information parity. But like here's one, potential.
Yeah, I'm gonna say we're there.
Yeah, so we're going to actually look at the chart as well, so Dylan can kind of tell us where you think support is and that sort of stuff, and resistance and that sort of stuff. So let's take a peek.
So this is the weekly chart going all the way back to 2016. Okay, because what I want to show is we haven't been down at this level for quite a while. We're chilling at 157 right now. Mm-hmm. We have very, very strong support at 148. For some reason in stocks, anytime you hear like whole numbers, 150 is probably going to be a giant support, right?
Yeah.
The lowest one after that is 129.07 here. Boom, 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 boom. But what's really interesting is do you know what an EMA is, Vinny?
Exponential moving average.
Right. So they try to follow the price. Okay. And they follow the price way quicker than these small moving averages. Mm-hmm. So I just want you to look every time. Now, it never really happened over here, but every time the stock gets extremely far from a 9 EMA, a 9 meaning like 9 days in calculations, very, very follows the stock very closely. An EMA weights the more recent dates more than the past ones. But anytime we get really high, we immediately crash down back towards it, right? Here, right back down towards it. Here, boom. You just kind of go back and forth because it literally can't stand that far away from the 9 EMA. Look at where we are right now. This is like the farthest one that we've had in almost a year.
Can you make that bigger?
Oh, yeah. Yeah. I'm actually going to go to the daily. It's actually worse on the daily.
Yeah?
Yeah, it's pretty bad.
It's pretty crazy.
So we're pretty far off the 9 EMA here. We come right back down. Very far off of here. We have a gradual recovery. Right back down. Boom. So let's just look at the daily real quick.
You're saying at the very least, it looks like a great setup for like a swing trade.
At the very least, though, ever since we started doing this, you got me more into long term. I think this was your plan all along.
Well, no. The idea is we're both coming at it from different directions.
Fair enough. The crazy thing is, look at how much this just gaps down each day. This is a giant gap. This is like a 4% gap down. This is another one. It's going absolutely insane, and then it gaps up on some days. But look how just extended it is just from the 9 EMA. So, you never want to catch a falling knife.
Yeah.
However, if you're going long-term long, this is not a bad buy point at all.
Yeah, 10 years. 10 years.
And the RSI also below 20.
Yeah.
Which is usually a big buy sign. Look at the RSI hasn't been that low for a very, I don't know if it's been that low actually.
Yeah, those volume bars are pretty serious capitulation, I think, right?
Yeah, and after you have a big volume bar, like even here, you have like a consolidation upwards. So I mean, this is, in my opinion, I don't see it going much lower.
Yeah, you never know, but yeah, I unfortunately, I picked up a couple shares this week, and I'm gonna have to sell some other stocks in my portfolio in order to keep buying more BABA at this point. But honestly, the numbers don't lie, and I think the people are so much fear right now that they don't realize that the Chinese are just being shrewd business people. I don't think it's unreasonable communist control here, but that's just my opinion.
And we're not saying that the China's they don't have like some communistic tendencies. It's just the stuff that they've been doing with BABA. It doesn't. If you look at what they're doing, it's not like a communism thing. We would expect the same. We would expect our data to be secure. We would expect our own data to not be used for purposes that we're not okay with, we would expect Amazon to not create a monopoly where they say, hey, you're not allowed to go to Target anymore. That's completely fair. Vinny's got some he told me this before we started, very tasty option plays.
Yeah,
tasty.
It's kind of interesting. Like, so I was talking to Dylan a little bit about how we could play this. In terms of the implied volatility, meaning Baba has had such dramatic moves that the kind of statistical distribution of where the share price can go is so wide now that there's some interesting opportunities where, like, for instance, I was telling Dylan he could sell the 150 cash secured put expiring this Friday and collect almost $4 per share in premium, meaning basically Dylan would collect $400 up front and then potentially have to buy Baba at 150 a share before this Friday. So, if you annualize that out in terms of rate of return on a yearly basis, it's like 139% rate of return, assuming, of course, you could do that every week for an entire year, which is unreasonable. But
yeah, well, it's not going to be this volatile, but for at least a month, maybe.
Yeah, I mean, exactly. The other thing too, you're going to get some what they call it, IV contraction, meaning the volatility is so high right now that the as it starts to stabilize a little bit, the actual premium there is going to kind of contract. So any option that you sell against Baba right now, even if the share price remains relatively consistent or even just moves a little bit less than it has been, you're actually going to be profitable on that. So right now is a great time to sell options around Alibaba because there's so much volatility in the stock.
What was the put one you said?
So that was the cash secured put that I just mentioned is expiring this Friday. The other one you could do is if you did the 150 and went out to September 17th, which is a month from now, you can actually collect $8.50 of premium, meaning that at worst case scenario, you would have Baba sold to you 150 a share minus that credit of the premium, meaning you'd end up owning Baba for about $142 a share.
If anyone has any questions and they're like, what on earth does this mean? If we get enough, we'll just have Vinny break it down in like a 4-minute video and we'll just throw it up there.
Yeah, we could definitely do that.
I'm 100% doing that if you're wondering.
I love it. Go ahead and let us know what you think down below. Like, are you guys going to buy more Baba now, or are you like just, nah, I don't want to deal with this political risk and get the hell away from it? Because I know what I'm doing.
I'm fine. A lot.
Get you guys in the next one.
Later.